Welcome to the Lend Academy podcast, episode number 254. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. Today's episode is sponsored by Lend It Fintech USA. The world's largest fintech event dedicated to lending and digital banking is going virtual. It's happening online September 29th through October 1st. This year, with everything that's been going on, there will be so much to talk about. It will likely be our most important show ever. So join the fintech community online this year, where you will meet the people who matter, learn from the experts, and get business done. Lend It Fintech, lending and banking connected. Sign up today at lendit.com/USA. Today on the show, I'm delighted to welcome Clay Wilkes. He is the CEO and founder of Galileo Financial Technologies. Now, Galileo is a fascinating company. They have been around since the early 2000s, but they've come of age in the last few years, and they are powering some of the biggest names in fintech. You know, companies like Chime, SoFi, Bluevine, Current, Aspiration, and many more. And they actually, according to Clay, they do like 95% of fintech companies are using Galileo in some way. And what they've created is a very simple API-driven system where, you know, any company can add a payments functionality very quickly and easily. You don't even have to be a fintech company or a bank. They've worked out a way to do this in a really streamlined fashion. And we talk about that in some depth and how they're able to do that. We also talk about, of course, the acquisition by SoFi that was been in the news a few weeks back, and we go into some depth about the thinking behind that and what this might mean for SoFi and for Galileo going forward. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Clay.
Thanks so much, Peter. Nice to be here. Thanks for having me.
Of course, my pleasure. So I know you've been working at Galileo. You were for many, many years, but I'd like to at least give the listeners some background about yourself, sort of what you did before that time, and maybe even leading into why you decided to start Galileo.
Yeah, my background is in operating systems and technology, communications. I had taken a prior company public, been retired for about 6 years before starting Galileo, and that was 20 years ago. So that's my background, is in technology. Galileo was really started to solve a problem that I saw in financial systems and transformation that I felt like was badly needed to match the internet age. And in the last, call it 5 to 7 years, we've really seen a boom in fintech, and Galileo's been in a good position to benefit from that.
Okay. So then maybe, when you started it, because obviously, 18 years is an eternity in fintech. I mean, fintech didn't really exist as a term. Obviously, there was companies like PayPal and a handful of others that were trying to do some things in financial technology. But why don't you just take us back to that time, and what was the problem you were trying to solve when you started?
Well, what we saw was systems that were, large, rigid, monolithic, difficult to work with, not really API based at all, not created in a way that would be flexible, scalable, architected in a way that could solve many diverse problems, just not well suited to solving the problems that we felt like could be and needed to be solved in payments. Many of the card platforms were architected to handle the inputs and outputs of a card transaction. We don't do that. We organize information very similar to the way it might occur, for example, in the file system on your computer or something such as that. It just happens to be financial information.
Mm-hmm. Okay. So maybe you could just sort of fast forward us through the last 18 years really quickly in just a minute or so, and talk to about how the company has evolved really up into this year.
If you go back in payments and banking, what you find is, credit, initially starting in the general store, moving to gas stations and department stores, eventually banks. Visa, Bank of America had an idea that we could invite other banks to extend a brand, get merchants on board. That really was all focused on credit, consumer credit in particular, and revolving credit bank issued. And sometime after that, debit came along. Again, it was a bank product, access to your DDA funds. And then, so you had traditional credit and traditional debit. And then anything that wasn't that was sort of thrown into this other bucket. And that bucket was about the same time that Galileo came about. And so that was the problem that we were trying to solve was many different business applications and diverse types of situations. And so it's our ability to be able to solve that has lent itself to being able to be kind of in the right place at the right time for fintech. And now we see companies like, TransferWise, Chime, Aspiration, Greenlight, Robinhood, Monzo, SoFi, Revolut, Remitly, PaySafe, just to name a few. Galileo clients, by one count, recent count, Galileo is powering 95% of all digital banking in North America. Wow. We have 5 out of the top 5 UK firms as clients. The top application in Canada is on our platform. The number 1 in the US, the number 1 in Mexico. We've just been in Latin America for 2 months, but of the top 20 down there, we've already signed 5. I think we're going to sign all 20 as clients. So, Galileo's done extremely well in API-based payments and banking.
Mm-hmm, mm-hmm. Yeah, so that is a pretty impressive track record. And, it's interesting because a lot of the companies that you mentioned there and the ones you're powering, they didn't exist certainly 10 years ago, and some of them didn't exist 5 years ago. And I'm curious about you've had this front row seat to this, explosion in fintech, where you've been able to, see, basically a banking industry or there's been new products that have come out in financial services consistently over the last, say 50 years. But, really, we have this kind of explosion in the last 5 years where things are really changing. I'd love to kind of get your take on how you sort of, you've had your business for whatever 18 years or so, but in the last 5 years, things just seems to have really taken off. Give us your take on how that's happened and how you've been able to take advantage of that.
Yeah, somebody mentioned to me that we were an overnight success, 18 years in the making. So you're right, it's been interesting to watch. And my own personal belief about this is that we're still in the early days of fintech. So, a lot of people are thinking, wow, we've seen a lot of progress in the last 5 years, and that's true. We really have. But my own personal belief is that we're going to see a lot of change in the next 5 years. And so we saw this with the internet. The internet exploded, took off. It's a big deal. And then Internet 2.0 kind of came along, and we saw a bunch of new leaders emerge. And my personal belief, we're going to see that again in the world of fintech over the next 5 to 10 years. There's still a lot of stories to be told. I'm thinking of companies like a Jio in India, and these global phenomenons that are TikTok. There's just a lot of the world that is still yet to be defined. And so I believe that we're still very early. We are going to see a response focused largely on consumer by the incumbents, I believe. I believe that wave is coming. Galileo's already seen it. Many of them are reaching out to Galileo to try and solve these types of problems. And we're also going to see, and have seen, but we're going to see much more of the emergence of big tech in the world of payments. So we're by no means done. In fact, we're just barely beginning.
Right. Yeah. And then, on that, we feel like we only just begun, but there are certainly some digital banks that have reached really impressive scale with several million customers here in the US. Same with internationally. I mean, you look at Latin America. I mean, you got Nubank with more than 10 million, or I can't remember what the latest number is. It's way more than 10 million, I think, as far as customers there. And so, as we grow, I mean, there's going to be, and as these companies mature, we have the need for really, bank-like reliability, bank-like dependability, where you go to the ATM or you load up your mobile app, and it always is working. It's 100% of the 100%
Right.
of the time. That's the sort of thing. So, what are you doing at Galileo to really ensure that you can provide that kind of the level of uptime and the dependability that some of the largest banks have really made us all accustomed to?
Well, that's a great question, and there's a lot that we're doing there. I want to take just a slight exception with your point, which is that big banks have made us accustomed to. Actually, if you look back over 2019, Wells Fargo had an outage that lasted 10 days. Bank of America had an outage that affected 60 million customers. Capital One had an outage that affected a day-long 106 million customers. So the big banks aren't immune from this. Amazon, the king of data centers, had an outage which affected 2.3 million businesses. I've personally been stranded by Delta Airlines, 3 times, and not for flight shortages, but for IT outages. And Apple, who spends trillions or billions at least on IT infrastructure, has outages almost continually. So outages are a phenomenon and a thing that goes along with technology, despite some of their biggest and best and most diligent efforts on the part of the big banks and other technology firms. And Galileo is a part of that. Despite that, I agree with the thesis, which is Galileo has done and is doing a lot, and we've had a very, very good track record related to uptime, fortunately. And one of the things that got a lot of play was the incident in October, and one of the things we've done since then, just to give you a sense, we had a project after that called 10X, and what 10X enabled us to do was to scale to 10 times our largest client. So in short, what this was essentially 140 million active accounts, representing somewhere on the order of 10 billion transactions, and reaching scale of about 5,000 transactions per second. So, we're doing all that we can do to ensure that we've got massive scale and capability. And the good news is the architecture is fully horizontally scalable, very much like any well-architected cloud-based solution today.
Right. And so, given the sort of the changing environment here over the last 3 months, where there's been certainly lots of pockets of activity that has scaled dramatically. We've seen digital banks adding new customers, banks adding new deposits, at record rates.
Yeah.
So, how has this changing consumer behavior really impacted Galileo? Have you been ramping up along with this increase in demand?
Galileo's seen massive growth since the beginning of the pandemic. Just as an example, I think about the infrastructure we're using right now, Zoom, and the growth that they've gone through.
Yep.
And the growth at Amazon. Quite honestly, we always hear that Amazon was built for the pandemic. Unfortunately, for many of us, it was in place. But I would say that's true of digital banking as well. Our clients have seen just incredible growth over the last 3 months. Just to give you a sense of that, for existing business, Galileo is up month over year of last month 165%, which is just absolutely incredible growth. And so we're doing all that we can, and fortunately things are working extremely well right now, and growth has been incredible. We've got clients that are adding, in some cases, 50,000 new accounts a day. Many of them have got waiting lists of over 1 million and 1.5 million accounts that are waiting to get on. It's just really a function of card production, not a function of scalability for us. Right. So there's a lot that is going on, and many of these companies like a Chime, a Robinhood. We just saw recent numbers come out on Current. These companies, Dave.com, they've all scaled incredibly well. Mm-hmm. Galileo's powering all of that.
Right. Okay, so one of the things that I presume you might have seen the column by Matt Harris last year about embedded finance, because as you're talking and as I sort of look at Galileo, I feel like you're really part of this movement towards embedded finance, where you've got maybe we step back and talk about Galileo Instant, which from my understanding of it is sort of a way to it's like a plug and play for different kind of financial services. And it seems like this is a trend that's really going to get, it's getting going, and it's got legs as far as I see. Would love to sort of get your, firstly, explain what Galileo Instant is, and then talk maybe more broadly about this trend towards embedded finance.
Galileo's built an incredible platform for these digital banks that we've been talking about here this morning. And if you look at those digital banks and new digital bank coming along that wants to build a great consumer experience, they've got some ideas around what they feel like that ought to look like. Galileo tries to provide the services that would enable all of that, but the process to do it is expensive and it takes time. And so, for example, you would have needed to have raised several $1 million. You need to know something about banking and about fraud and about disputes and compliance and regulation and all of the rest of it. It's expensive and it's not easy. It's difficult to get into. But there are many businesses that just simply want to make a payment. They don't want to be a payments company. Mm-hmm. They just want to make a payment. And so that's the thing that we're trying to do with Galileo Instant. It's a product we announced late last year. We've been in beta over the last several months. The product is going live this month, and we've had 450 companies with inbound interest sign up for and gain access to the APIs that power Galileo Instant. To answer your question, the problem that Galileo Instant is trying to solve here is I have a neighbor that is, he owns a steel manufacturing company, uses welders to assemble this steel, 10,000 welders. And he asked me, he said, do you have a product that would allow me to pay my welders by the weld? And I said, well, if you give me about 2 months, the answer to that is yes. And, so that's one application. Google has 23 million YouTube influencers that need to be paid every month. So if you think about that, and that particular portion of Google, I could imagine this doesn't necessarily want to be a payments company, although Google itself might be. They just simply want to make a payment. Mm-hmm. So whether you're talking about a welding company or Google, we see thousands of these applications, and we've done some engineering and recent testing around what does it take to get into this type of business, and we've reduced it from many months. The sales process can be months, the integration can be months, the marketing ramp behind all of that on the part of our client can be many months. So you could see one of these digital banks take anywhere from 12 to 24 months to really get started and begin to market their product. Whereas on Galileo Instant, we've reduced that to a number of minutes. So somebody can come to the Galileo Instant product and gain access to it. It's all API driven. And within a matter of minutes, we've eliminated all of the friction that goes into needing to make a payment. And you can begin to do it. You can do it in a co-branded way. So Google could do it, co-branded YouTube, et cetera. It's pretty powerful. And we've seen this on the acquiring side, but not really much innovation here at all on the issuing side. So I'm pretty excited about it. And these are the types of products that I was talking about when I was mentioning earlier around Fintech 2.0. We've still got a lot of headroom, another 20 years worth at least.
Right. So you think then that we're going to see, the companies you just mentioned there, the welder, Google, these are not financial firms, but they want, obviously every single company on the planet has a financial function, because otherwise,
right,
that's just by definition. So do you think what you're going to see is, a range of companies, it sounds like from what you're saying, even down to reasonably small companies that can offer their own sort of co-branded financial services. Is that where we're moving?
Yeah, we've seen, law firms that need to pay folks that are running satchels around town on bicycles. We've seen a restaurant firm that is paying millions of restaurant workers, and they want to do it, on an interval that doesn't necessarily match to what is available in traditional applications. And it's not easy. It's not easy to find these types of applications or enabling technologies. And to my knowledge, they're not out there today at all. So I can see this ranging from big to small.
Okay, so I want to talk about SoFi. Obviously, we know the company really well. We had Anthony Noto on the show last year, and you've been you've had a partnership with them for quite some time. So maybe we could just if you could give some sense of the history of your partnership with SoFi, and when you sort of started to think that there could be more than just a commercial relationship.
In my first meeting with Anthony Noto, I was impressed with him. He's a great leader who's got incredible skills. He's analyst, but as a CEO, he's driven. He's great. He's smart. He's quick on his feet. He's great in front of a group of analysts. So if you've had him on the show, you've seen probably some of those skills come through. Mm-hmm. He and I hit it off. We share a vision. SoFi is, in my view, has been fairly quiet, although they've raised an incredible amount of money. They, at one point, had raised more money than all other fintechs combined, $2.5 billion. So very, very impressive on the lending side, making their products available through consumer packaged type of approach. And the idea was, could we take those products, wrap Galileo's enterprise grade APIs around them, and make them available out to our clients, where we've done really well with the clients on the debit and banking side, and provide these lending products in such a way that it's easy to integrate, easy to gain access, and it's an exciting opportunity. I think this gives Galileo a several 3-year to 5-year head start over anybody that's even thinking about doing anything similar, because it takes a long time to build what SoFi has built. It's a really incredible business and very capital intensive.
Yeah, I know, and I think it's been running for years, and obviously Anthony hasn't been there since the beginning, but it's SoFi had built up a machine, particularly when it comes to consumer lending, student loans. Student loan refinancing.
Mortgages.
Yeah, they invented student loan refinancing basically, and they're a very impressive company. But so then, from what I gather, from what you just said there, it sounds like what you're saying is that a company like Chime, a company like Dave, a company like Revolut may offer lending, and it could be powered by SoFi. Is that kind of what you're saying?
Right. So the lending products, the way that I think about SoFi is really as yes, they've got a great consumer front end and a great consumer experience. Galileo powers the SoFi money side of that. But they really have on the back end, they have this, I refer to it as a digital securitization pipeline. Right. And it's an incredible business. And anybody that wants to try and rebuild or compete, it's got, as you say, it's got a lot of work to do to put all of that in place. And what we want to do is make that available through our APIs.
Right. Yeah, that could be super interesting because, as you say, SoFi have, when you look at sort of the securitization volume in the consumer loan space and the student loan space, they really have dominated, and it's been really interesting. So, be interested to see how that really expands. So I take it then from what you're saying, you didn't run like a full like acquisition process where you wanted to hear from a bunch of different potential acquirers. Is this something that you really just you started talking with Anthony and the team at SoFi and you thought, wow, we should do something more together?
Right. It was more the latter. There was definitely not a process that we ran. Timing of the deal was interesting. It all happened from mid-March on. If you think back to mid-March, we were accelerating in the deepest financial trough that we'd been in, even deeper than the changes immediately preceding the Great Depression. 35% correction in whatever it was, 28 days, beat the Great Depression by 2 days in terms of that acceleration, deceleration, I should say. That was kind of the backdrop to all of this. It takes tremendous fortitude on the part, really, of Anthony and that board to finish a deal. Forbes wrote it up as the first all virtual deal in history. All of the diligence was done virtually because of the pandemic. So there's a lot of notoriety to it in that regard. But yeah, we were just feeling like we had a shared mission and shared opportunity here, and I'm a big believer in that. And there's a role model for this in the industry. You look at Amazon; they've got this great consumer business, right? And AWS is this tremendous infrastructure business. But one of AWS's biggest clients is actually Netflix, which is a big competitor to Amazon on the video on demand side. So, that interesting dynamic is there, and we believe will play out well. And the receptivity to the combination of SoFi and Galileo has been tremendous. Our clients have all greeted it with eagerness, because it really provides them opportunity.
So even though SoFi has a number of different products which are directly competitive with many of your clients, and obviously you talk about the Amazon and Netflix example, which they're obviously directly competitive. So despite that, there hasn't been anyone who's sort of getting nervous about, well, what's this gonna mean for us when you really, if you're owned by SoFi, how, like, is everyone? It sounds like what you're saying is there's no one that's expressed sort of some hesitation with continuing to do business with you guys.
Yeah, largely what we're seeing is meeting the deal with open arms, embracing the opportunity. Galileo is committed to being an independent business. We're ring fencing the data and data sharing. We're doing that not only from a policy perspective, but contractually. We're putting in place the things that are needed to make sure that our clients, protecting our clients' information, client information, roadmap, strategies, et cetera, is key to what we do. We already power, I mentioned a few of our clients, but we power, competitors today, if you will. So we're not in the business of sharing that information, between one client and another client. That doesn't serve our or their purpose.
Right.
And so SoFi is really no different. We'll, as I said earlier, we'll make available these products, and that's the overall strategy. But having Galileo remain independent, serving the broader financial services industry, serving fintech specifically, is absolutely the directive and the mission.
Right. So is it, because obviously SoFi has a range of different products, but is this, or what your clients most interested in? Is it the lending, access to sort of the lending machine that SoFi has done there, or is there something more?
Well, we've got a number of products that are on the roadmap. If you think about the SoFi Invest product, which is fee-free, fractional share kind of capability, all on market. Galileo, we intend to make that product available also through our APIs. Our expansion, we haven't talked much about our expansion into Latin America. We're also expanding into Asia Pacific. We recently purchased a broker dealer there, and we will power the cash management solution for that. But in the meanwhile, we'll also go into Hong Kong and provide capabilities to the other 160 fintechs that are there. We're moving into Singapore and into Japan as well. And I've had a lot of inbound interest from that region over the last several months, and really since the announcement of the SoFi acquisition. So there's a lot that we're doing there, and it isn't limited to U.S. lending. We're seeing opportunity that's more global and more expansive than that.
Right, for sure. And so it sounds, so from what you're saying, in a lot of these regions, there really isn't a Galileo equivalent. Is that what you're finding when you go around the world?
True. Yeah, very true. We've seen this in Latin America, and moved into Latin America. And you mentioned Nubank earlier. They had to solve the problem themselves. But as they've looked to expand outside of Brazil, they're looking beyond that. Same thing with Walla as they've looked to expand into Mexico and Colombia, beyond Argentina. If you look at Asia Pacific, there's really no capability there, and that's true. To be honest, despite some of the successes in the UK, I mean, look at the infrastructure providers there, and they're somewhat limited as well. So there really is a global opportunity to take these services, international.
Okay, so last question as we wrap up. You talked about international, you talked about Galileo Instant. What's sort of the focus for the next 12 months? Is it really, maybe just answer that question open-ended.
Yeah, I think it's two or three things. So it's focusing on the integration of the lending products, API-based enablement of the lending products. It's continuing the expansion into Latin America. We've identified beyond Mexico, we've identified 6 countries. We're moving very quickly right now into Brazil and Colombia, but right behind that will be 4 additional countries in Latin America. We're also expanding into Asia Pacific now, as I mentioned earlier, Hong Kong, Japan, and Singapore. And so that's a big part of what we're doing over the next 12 months. In the meanwhile, Galileo Instant will have launched. We've had a lot of interest and excitement around that. Lots of clients have actually already integrated to it, and the big launch will come here in the next, call it 30 days. And it's going to be exciting to watch that product begin to emerge as a kind of new way of doing business in fintech.
Mm-hmm. Well, it'll be interesting to see. We'll be following along. Clay, I very much appreciate you coming on the show today.
Peter, thanks for having me. I really appreciate it.
Okay, see ya.
Thank you.
One of the trends that I think is probably the most fascinating right now, and that is this movement towards embedded finance, which is, I mentioned it, Matt Harris, Bain Capital had those 2 articles about it late last year. And I find it fascinating because really what it comes down to is that, and Galileo Instant is really going to help facilitate this, is that any company can offer financial services, and that any company can offer, really pretty customized, exactly to their needs, like whether it's, 10,000 welders that want to be paid by the weld, or whether it's some sort of, a bank that has a very specific need. A lot of these things can now happen. And so we're going to see fintech, continue to expand out into non-finance companies. And I think that's going to be the most interesting thing of all, where finance will become invisible. And I think that's really where we're going. It's going to be all happening this decade. I think that's going to be very exciting. And Galileo is certainly going to be a company that is going to help facilitate all that. Anyway, on that note, I will sign off. I very much appreciate you listening. I'll catch you next time. Bye. Today's episode was sponsored by Lend It Fintech USA. The world's largest fintech event dedicated to lending and digital banking is going virtual. It's happening online September 29 through October 1st. This year, with everything that's been going on, there will be so much to talk about. It will likely be our most important show ever. So join the fintech community online this year, where you will meet the people who matter, learn from the experts, and get business done. Lend It Fintech, lending and banking connected. Sign up today at lendit.com/USA.